Let's talk about Regions. I mean, Regions in the last few years, they have been kicking ass like crazy. I mean, this is a great bank. We love the way they are managed. Okay, they have a financial, they have a great funding offers when it comes to business credits, when it comes to personal credit. But in today's conversation, I want to talk to you about their business lines of credit. Okay, and you have the opportunity to actually be approved with an EIN option if you know how to apply. Okay, so let me give you the overview. So when we think about Regions, and you are thinking about their business lines of credit, just note right off the bat, their Regions itself does not run the whole operation. What they have done is that they have actually partnered with a third party, okay, and the company is called Foundation, not Foundation, but Foundation, and basically they so Regions actually runs their business lines of credit through their business loans, also through foundations, okay. But what we love about Regions business line of credit is that they really actually are very flexible. I mean, they'll just approve you. They'll approve you all the way to $1 million if you have the right financials. Okay, if you have the right, I would say the right profile. Okay, and so you can use, and they actually are very flexible in terms of allowing you to use the cash as you see fit. You can use the cash to modernize, to renovate, and improve everything you want. You can actually purchase machinery, equipment, or vehicles. You can refinance even existing debt. I'm really insisting on that because there are some players in this industry. There are some lenders. When they give you the cash, okay, when they give you the business line of credit, they insist on you actually using the cash for certain things. But Regions is not really doing that. They actually are giving you opportunities. You can use the cash to fund working capital, emergency funds, finance new opportunities. You really decide, okay? And so for term loans up to, like, for business loans of credit, they will approve you all the way to $1 million, again, including if you have the right profile. And sometimes they will ask you just to secure the line of credit. By the way, boss, welcome back to the show. It's really a fantastic opportunity to talk to you today about Regions, okay? And this bank is just kicking ass, as I said before, when it comes to their business lines of credit. We love the fact that they're constantly improving, okay? They actually can give you the funds in as little as 3 days, okay? 1 to 3 days, fantastic. And so they have an application website where you can apply 24/7. Fantastic, not a problem, okay? But the thing is, remember, if you want to get a Regions business line of credit, you can speak to a Regions/Foundation representative, okay, for online application questions. You have to call 1-888-398-0085. Number once again is 1-888-398-0085. Now let's dig a little deeper here. What are the steps you need to actually go through to get a Regions business line of credit? Okay, it's really important to understand that Regions is, as I said before, they're very flexible. Okay, they're not going to complicate things for you. They're not going to ask you like a long list of questions, whatever. You know, I mean, they do have their requirements in terms of let's say revenue, right, credit score, and operational history. So those are the three things they pay attention to. This trifecta is quite essential for Regions. So they'll ask you to have revenue. So revenue, depending on the states you're applying from, it can be $50,000 a year or $100,000 a year. We've seen startups with no revenue being actually approved for a Regions business line of credit, even a business loan for that matter. But those startups, they had a fantastic application package, okay, with a strong business plan and whatnot. So this is kind of cool. But Regions, sometimes I want you to, like, in terms of credit score, if you have a minimum 600 credit score, Regions will consider you. They'll actually pamper you, by the way, okay. But even if you have 550, they can still play with you. They can still work with you. But you have, again, you need to have the relationship. You need to have a relationship, a strong prior relationship with Regions. In terms of operational history, they want you to have 6 months. You know, they want you to be in business for 6 months so that they can see that, okay, you know, you have been in this game for a while, and you can actually show some type of operational track record. Okay. By the way, boss, son, daughter, I'm talking to you today about Regions, and I'm actually today's topic is Regions business line of credit. So I'm just kind of telling you everything you need to understand. So if you want to apply for a Regions business line of credit, you know exactly what you're getting yourself into. Okay, no surprise here, no apology, no ignorance, because we are against ignorance on this show. Okay, now what you want to do is Regions wants to have like they might ask 3 to 12 months of recent bank statement. But the cool thing is, if you already have a relationship with the Regions, then you don't need to actually send them bank statements, because they already see your transactional inflows and your transactional cash inflows and cash outflows. Okay, they might ask you to have 1 to 2 years of business tax returns and 1 to 2 years of personal tax returns. So they will ask, in essence, your 1040, okay, for the last 2 years, as well as your 1065 or 1120S or 1120 with the accompanying schedules K1. Okay, this is important. Never forget that when you send a business tax return, always attach, if applicable, your schedules K1. One thing I want to say here is that Regions is really flexible, and I said this before. You can actually get a business line of credit with poor credit. If you have a sub 550 credit score, you can get a Regions business line of credit, but you need to fulfill 2 conditions, actually 3. And again, we're telling you what we have seen working for our business clients, and I'm not talking about 5 years, boss, son, uncle. And I'm not talking about 5 years. I'm speaking about 20 years. I'm speaking about 25 years. Okay. You got to have 3 things. You got to have a business plan. You got to have financial statements. And those financial statements, guess what? They could be projected. In other words, if you, let's say, you're like, listen, I've been having losses. Things are really complicated. I can't really manage to pull in revenue. Okay. So what you do is, instead of having actual results, you just resort to projected results. So you have projected financial statements. Okay. So those are also called estimated. So when you hear the terms forecasted financial statements, estimated financial statements, or pro forma financial statements, they are interchangeable. They mean the same thing. Okay. So the third thing you want to have, so you got to have a business plan. You got to have your financial statements, your financial projections, if you will. And the third thing you got to have, and this is so important, okay, if you're trying to have a business line of credit with poor credit, is to basically explain the use of loan proceeds. What are you going to use the money for? It's not about, there is an ancillary element here. What are you going to use the money for, but how are you going to repay the money? Because again, Regions is willing to give you the cash. Okay, if you have a great relationship with them, of course, the relationship should really undergird is the undergirding factor here, because for those 3 elements to work, you got to have the relationship. So for the business plan, for the financial estimations, for the use of loan proceeds and ability to repay, it's called capacity. For those 3 things to work, you got to have the relationship. That's if you have bad credit. Okay, so have the relationship so that you're able to explain how you're going to use the money. And especially in this economy where things are just going flying, left and right, how are you going to have a solid business plan, business model that will help you to generate revenue, enough revenue to repay whatever you charge on your Regions business line of credit? You have to explain that. Now let's talk about the decisions here. So if you're interested in having a Regions business line of credit, what do you actually need? Okay, you do need a couple of things, but depending on the geography you're in, depending on the states you're actually applying from, Regions might be lenient. Okay, and they've been doing this like for many years, because what they do is they actually look at exogenous factors and endogenous factors. So when you apply for a business loan, some lenders only care about your endogenous factors. Endogenous means your internal factors. Okay, things that are related to the company itself. That's what a lot of players, a lot of lenders like to pay attention to. Now, Regions is having a more holistic approach. So they will look at your endogenous factor, in other words, your internal factors, but they also pay attention to your exogenous factors, your external factors, like the market, the economy. Talk to me about that. That's kind of crazy. Like, gas prices are going up. It's just like, you want to buy some grocery. Like, you'd be like, whoa. I mean, I thought I have $5 in my pocket. I could just buy some I don't know, some whatever. And I just realized that even with $5, I can't do it, and I can't buy nothing here. Inflation. Okay. The state of the economy. What are the conditions in your own sector? So your company is in a specific sector. Regions will pay attention to that. I mean, what are the trends? Are we having a yo-yo movement? Are we going up and down? What's happening? What's happening? Regions always say, listen, wait a minute here. What's happening? And this wait a minute can go actually two ways. Wait a minute means what? Wait a minute means your company can be making money, right? But if you are in a sector that is declining, regions will think twice. And the opposite is also true. Let's say you are in an industry that's making money, like people are making money. Your rivals are just making money, and you're sitting there lethargically losing money over and over and over. Those two things, could actually be grounds for rejections. What am I trying to say here? I'm trying to say that regions is paying attention to two things: your internal and external factors. So they look at proof of time in business. They want to make sure that you have been in business for a while. If you say I've been in business for 6 months, they need to have proof that you have been indeed in business for 6 months. You can prove this through purchase orders, through financial statements. You got to really have records of annual revenue. By the way, boss, I want to quickly remind you of today's topic. I'm just having a quick convo with you about regions, business line of credit, so we are clear about what we're speaking about. Next time you hear somebody actually talking about regions, business line of credit, they know if they're telling you can tell if they're telling the truth or they're just full of it. Okay, so you need to show records of annual revenue. So records means what? Again, going back to what I said, you got to go to your QuickBooks records, to your zero records, to your Wave records, to your Expensify, to your FreshBooks, whatever accounting software you use. You got to go back to those records and say, okay, I have proof that I've been making money. You got to show this to regions. And also the third thing is your credit score. Your credit score is important, and it doesn't matter if you're unless you want to get this business line of credit with EIN only. If that's what you want to do, there are ways to do this, and we have actually explained the process in other shows. If you have questions, just let us know in the section below. In the comment section below, and we just answer you. We'll let you know how to actually apply with EIN only, but you can apply with But otherwise, you're gonna have to pay attention to your personal credit score. Okay, what I'm trying to say here is that your FICO score will have an impact on whether or not you get approved for a region's business line of credit, and if you do, what terms and conditions that the bank will actually impose on the transaction. Okay, are they going to charge you 10%, or are they going to charge you 30%? For example, are they going to renew your line automatically every year, or they are going to ask you to renew, like they're going to review your account every 3 months to see if you still qualify? Okay, so there is a constellation of things that they do this. Don't take it personal. Like if they ever do this, don't take it personal. It's just the bank is just trying to cover. They're trying to cover their asses. Think about it. Like, it's all about risk mitigation. It's not. There's nothing personal here. Okay, everybody's just trying to play the game as best as they can. And so this is what I'm telling you all this because I want you to be prepared. I want you to really beef up your application profile so that when you apply for a region's business line of credit, you get approved right off the bat. Okay, and so if there's one thing you could probably take away from this convo, I want you to really start beefing up your relationship with the regions if you want to get a business line of credit from them. Now let's talk about some types of business lines of credit you can actually get from regions, because see, regions is a mid-tier bank. They have a substantial balance sheet. They have the expertise. They have the depth of knowledge. They have the depth of portfolio to actually give you whatever business lines of credit you are asking for. So it's important to really have that, to understand that. So at regions, you can actually get a secured business line of credit or an unsecured business line of credit. There will be other there'll be other business lines of credit anyway. So a secured business line of credit just means what? It means that you just like, okay, you look around in your balance sheet and say, you know what? I think I can just pledge this asset as collateral. So what will happen here is that regions will send one of their appraisers, and their appraisers will come, they'll look at your assets, and they'll say, okay, we think this asset is worth $1 million. So we'll grant you a secured line of credit for your business up to $900,000. So that if something were to happen, we'll just repo the asset and sell it and just recoup our losses. Okay, and this works if you are in a geography that regions, like if you are closer to a branch, because those appraisers, sometimes everything is managed from the branch. Okay, you can also get an unsecured business line of credit through regions. Okay, and so here you don't have to pledge anything. So like regions is just comfortable with your business profile. They know that you have the financial stability, the monetary discipline to actually pay whatever you charge on the line of credit. So they're fine. And this usually happens if you have a stellar credit or you have been in a great relationship with the regions over many years. Either way, whether you have a great credit or a bad credit, it always helps to establish a relationship with the bank with whom or the bank with which you want to get credit. Okay, it takes time, but it's definitely worth it. Another type of I would say regions business line of credit is their real estate line of credit. Now they don't actually run this in all their geographies. There are some states where their real estate line of credit, their real estate business line of credit is available. And there are some states where they don't actually run the program. So you need to understand regions actually adapt their strategy to the states they're currently in. Okay. And this is why they're so brilliant, because they actually never have the same strategy for 2 or 3 states. So the question is right now, does your ALC, does your S corporation, does your C corporation, does your ALP, son, daughter, grandpa, grandma, does your company have some kind of real estate? Are you working on a real estate project? Are you renovating something? Are you like, you gotta be doing something real estate wise for you to actually get a real estate line of credit, because the underlying property will be retained as that property as collateral. Okay, there are some instances where regions will agree to actually take your home residence, you know, as collateral in a business transaction. Again, it's all about regions just making sure that your collateral is of value. In other words, your collateral, if something were to happen, they can actually quickly sell the collateral and just recoup their losses. That's what regions cares about. You know, regions cares about that a lot. And you need to understand that for them, it's just another day at the park, another day at the bank anyway, okay? And you can also use your home equity line of credit in your primary residence or secondary residence to take care of that too. And another line of credit that it's not really a line of credit, but it's like, it's a revolving line. That's your business credit card. So Regions also has a business credit cards, and we have covered this on other shows. But what I wanted to say is that when you think about a business credit card in general, it also works like a line of credit, right? However, it's used for smaller ongoing expenses because it may cost more to withdraw cash from a credit card. So it can be a good starting point for new businesses without established finances to qualify for other types of financing. Okay, so boss, if you are listening to me right now, you are in the category I just described. Let's say you are struggling right now, because maybe you're new or because you've made mistakes in the past. It's just a lot better to just to try to get a Regions line of credit to actually rebound. Okay. Now, let's talk about quickly let's talk about the difference between a Regions line of credit, a Regions business line of credit, and a Regions business credit card. I mean, I spoke about this very, very briefly, like in the last section, but I really want to dig deeper because it's important for you, if you want to get approved for a Regions business line of credit, to know why they're different and what advantages you can glean from either or. Okay. So business lines of credit tend to have much lower interest rates than business credit cards. Some lenders, including Regions, also offer longer payment terms for lines of credit, other than the monthly payment schedule of a credit card. And a business line of credit, or a personal line of credit for that matter, provides a higher credit limit because it can be secured by collateral if needed. And as a borrower, we can withdraw cash from a line of credit, while credit cards charge additional fees for balance transfers and cash advances. And a line of credit is best used for larger expenses, while a credit card works best for smaller, ongoing expenses. And a business credit card from Regions or another player may provide rewards, okay, or cashback, and small business owners can take advantage of 0% interest promotional offers. So you can see that right off the bat, there is potential there, okay? And the whole thing is that it's all about what you need. It's all about what your business need, okay? And it's all about whether or not you would rather go with the Regions business term loan, or if the business line of credit was good in the first place. Because if you actually are thinking about it, at the end of the day, it's all about you getting credit, right? You want to get credit to take care of business. You want to get credit to actually to repay whatever you're spending money on, or you want to get credit to actually, like you say, clean a lot of stuff in your business. So it's really about what really works for you, because it has to work for you. If it doesn't work for you, then you really want to ditch it, okay? And including Regions. If the bank is not the bank for you, then you can just ditch them with not a problem. But they are a great bank. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about Regions business lines of credit, okay? And I give you the overview, the steps, the decision, the review that you have to consider while going through this credit product. Thank you. God bless you. I'll speak to you another time. But until then, remember, stay marvelous.